What's up, YouTube? My name is Ty, financial advisor. Welcome to my channel. Please like the video, please subscribe, and catch me every weekday after market close on the Smarter Gambling Show. So here is BBIG Vinco Ventures. This finishes at $1.13 today. That is up 58.77%. So we last covered this stock when the whole hostile takeover drama was happening. That attempt failed, but then after that, the stock got halted indefinitely because it was not in compliance with NASDAQ rules. So that was pretty nerve-wracking. Nobody knew when it would unhalt. But today, out of nowhere, surprisingly, this did unhalt. And not only that, it started gamma squeezing. We did have some news yesterday, so let's check that out. Vinco Ventures enters social media, US and Canada markets in partnership with AI pros. So that was bullish. It had somewhat of a factor on today's price action, but there's really no justification as to why the stock wound so hard today. This doesn't make any sense. No idea why the apes started piling in here today, but certainly not complaining. I'm very happy for the apes. So this stock was number 5 on StockTwits today, had 5,000 mentions, so once again, we're going to analyze it. All right, let's go ahead. Let's jump right in and analyze here. So right now, this is a cup and handle in the making, bottom of the cup being the low of 67 cents, and there can be multiple possible tops. It can be 160, 225, 260, $3, or 340, and longer term, this is part of an even bigger cup and handle where this has the potential to come all the way back up to 555, 910, 1040, or even the high of 1250. But those are all bullish indicators. That is telling us that the stock should come back up to one of those tops to complete the cup. Here we have a descending channel. Right now, the upper channel is at 70 cents and the lower channel is at 40 cents. So if this breaks 70 to the upside, that would be bullish. And if this breaks 40 to the downside, that would be bearish. So this did in fact break 70 cents today. So the descending channel is currently a bullish indicator. We do have a gap up created today at 73 cents. So that's a bearish indicator. That is telling us that the stock should come back down to 73 cents to fill this gap. And then we do have 5 gap downs. First gap down was back here at 955, so that's a bullish indicator. That is telling us that the stock should come back up to 955 to fill this gap. Second gap down was back here at 745, so another bullish indicator. That is telling us that the stock should come back up to 745 to fill this gap. Third gap down is back here at 585, so another bullish indicator. That is telling us that the stock should come back up to 585 to fill this gap. Fourth gap down was back here at 275, so another bullish indicator. That is telling us that the stock should come back down to 275 to fill this gap. And the final gap down is back at 190, so another bullish indicator. That is telling us that the stock should come back up to 190 to fill this gap. So quintuple gap down, extremely bullish. In the aftermarket here, this is running up to 125. So if this aftermarket action holds, that would be a bullish indicator for tomorrow. That is suggesting that tomorrow the stock will run to the upside as well. And finally here we have a symmetrical triangle forming. Right now the upper channel is at 145 and the lower channel is at 75. So there's a lot more consolidation to go here, but this should consolidate somewhere around 110. And from there, it's going to break out either way, to the upside or the downside. So the symmetrical triangle is currently a neutral indicator. And if you guys want to follow along, the link to the chart is in the description down below. So right now, this is trading between the sideways channel, the rectangle of 115 and 110. So if this goes to the upside, next levels of resistance would be 115, 120, 125, 135, 145, 160, 175, 190, 195, $2, 205, 215, 220, 225, 230, 240, 245, 250, 260, 265, 270, 275, 285, 290, 295, and then $3. There is resistance above $3, but we're not going to discuss that right now. And if this goes to the downside, next levels of support would be 110, 105, $1, 85 cents, 77 cents, 73 cents, 71 cents, and then the low of 67 cents. So right now with the current price, 113, the channels to the upside are very wide, so expect significant price action if the stock continues to run to the upside. However, if/when this breaks 190 to the upside, the channel starts to narrow. So expect a significant decrease in price action if/when this breaks 190 to the upside. And to the downside, the channels are pretty narrow, so don't expect too much price action if the stock goes to the downside. However, if/when this breaks $1 to the downside, the channels start to open up and get wider. So expect a significant increase in price action if/when this breaks $1 to the downside. RSI is currently at 51, so that is very average. The current price of 113 is around fair market value, according to the RSI. And this was in oversold and undervalued territory just in the last trading session. So this was a massive increase in the RSI today. and this did 87 million in volume today, which is the second biggest volume day of the year, so very significant volume, way above the average of 26 million, so this pump slash squeeze today was confirmed by the volume. Okay guys, just my opinion, not financial advice. So it's been a pretty rough year for this stock, pulled back all the way from the high of $12.50 to under $1, and we got a lot of drama along the way, the whole Cryptide dividend drama, the whole hostile takeover drama. Fortunately, that's done with, and now the stock can finally start pumping again. So long term, the stock still looks really bullish. Again, we have some strong bullish indicators in the cup and handle, aftermarket action, descending channel, and quintuple gap down. But in the short term, there's a good chance this pulls back pretty significantly. Again, we have a bearish indicator in the gap up, and then we have neutral indicators in the RSI and symmetrical triangle. So therefore, if you want to go long, not financial advice, the current price of 113 isn't a bad entry. It's a very average entry here. I guess if you're going to buy and hold this for the long term, it's a pretty good entry. Again, this should eventually come back up to 955 to fill the gap there. And from the current price of 113, that would be over a 740% upside potential. So massive upside potential here in the long term. And again, this should eventually come back down to 73 cents to fill the gap there. So from the current price of 113, that would be over a 35% downside potential in the short term. So I would say going long at the current price 113 would be a high risk, very high reward play. Like I said, if you're going to buy and hold for the long term, it is a pretty good entry. But honestly, if you're a bit patient, again, it should come back down to 73 cents to fill the gap there. And I think that would be an excellent entry. A much better entry than the current price of 113. So from 73 cents up to 955, that would be over a 1200% upside potential. So even more massive upside potential here in the long term. And this really shouldn't go too much further to the downside. 73 is near the all-time low. So I would say going long at 73 cents would be a low risk, very high reward play. And that is definitely worth a shot in my opinion. Really can't go too wrong there. So I don't like the current entry of 113, although it's not a bad entry. But I can support going long at 73 cents, where the gap is. And if it pulls back, then you can just average down at these supports that I mentioned before. Now, if you want to go short now, financial advice, seems like a pretty decent play. Just a little risky at the moment. Again, in the longer term, this has a 740% upside potential. And again, in the short term, this should come back down to 73 cents, which would be a 35% downside potential. So I would say going short at the current price, 113 would be a very high risk, high reward play. A bit too risky for my liking, so I personally wouldn't go for it. There are definitely way better short plays out there in the market, but this should pay off pretty big. This should come back down to 73 before it runs to the upside again. So as long as you're able to withstand some upside pressure here, this should pull back down to 73 cents to fill the gap, and that should be some pretty fat tendies on the downside there. So I can support going short at the current price, 113, and higher. And again, I would cover at 73 cents where the gap is. And that should be a relatively easy 35% downside gain. I would just advise using a stop loss in case things do go wrong. So kind of risky, but it should pay off. But honestly, there are way better short plays out there in the market. So if you don't want to stress yourself out that much, you're probably better off just moving on and looking elsewhere. So congratulations to everyone who made money in the stock today. Consider taking profits if you're up, not financial advice. And good luck to everyone currently in the stock and to everyone looking to take a position. This is BBIG Vinco Ventures. Thanks everyone for watching today. I appreciate you guys. Please like the video. Please subscribe and catch me every weekday after market close on the Smarter Gambling Show. You apes already know. Diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace out.